Welcome to Share Talk, the only podcast where investors come first.
Today we have Mick Billing, who's the chairman and CEO of Thor Mining, which is an exploration company trading both on the AIM market and the ASX in Australia. Hi Mick, how are you?
G'day Rob, nice to talk to you.
Good. You released an RNS yesterday regarding the Kapunda Copper resource. Do you think you can go a bit more into that?
Sure, Rob, happy to. We're absolutely stoked with this result. When we first started thinking about what the resource at Kapunda would be, we were guided to some extent by one done about 25 years ago for other using different mining and processing scenarios. Albeit at about 45,000 tonne of contained copper, and we knew there was more we could get within situ leaching, but it took us a while to work through the process and do it to a standard that was that had credibility, and we were hoping for about 70 or 80,000 tonnes of contained copper. When it came through at almost 120,000 tonnes, we were really chuffed.
I can imagine.
And look, copper at the moment, it's travelling at relatively close to $7,000 a tonne. Well, you can't multiply $7,000 a tonne by 120,000 tonnes of copper and come up with an answer that really means anything, because it ignores the cost of getting it all out. But it's a significant number, and so in global copper sense, it's a relatively small deposit for a company like Thor earning an interest in this project. It's very, very nice indeed. We're very happy.
Okay, and what are the next steps then with this project?
I think there's work to do, Rob. We know now that the rocks are likely to leach, and we've done some work that there's porosity and permeability through the core that really is a pretty good indication of what the rest of the ground is like, we believe, and that we should be able to dissolve the copper without the costs of mining the stuff, crushing it, then grinding it, and then putting it through a flotation or a heap leach arrangement after that. All of which cost a lot of money, but we've got some more test work to do, some field trials. And we've also got to keep the local Kapunda community informed of how we're going and of our plans, and keep them content with the way we're going about doing things, and then we're not going to leave the local environment worse off in the process. I guess the thing that perhaps is worth dwelling on a little bit, if we go back to the nature of the deposit, Rob, is that is people may have focused on the grade and said, "Oh, that's pretty low grade." In terms of this sort of technology, it's not particularly low grade. It's about the sort of grade that works very, very well. If you had quite high grade, 1% copper or thereabouts, well, that'd be lovely, but it wouldn't. You wouldn't dissolve the copper with in situ recovery techniques nearly as well or nearly as effectively, and get the recovery or the recovery in an acceptable time frame as quickly. That's because largely because there's a surface area effect of the lixiviant on the mineral. If it's nuggety, there's not as much surface area as there is if it's fine grained and relatively evenly distributed. So low grade and fine grained is one of the keys to success. If we compare Kapunda with some of the other in situ leach deposits of copper around the world, there's some in Russia that we don't know too much about. There's a number in Arizona in the United States, two of which have been operating for 10 or more years. Another one that feasibility has recently been completed on. Now, their grade's about the same as here at Kapunda, perhaps a smidgen above, 0.29% copper instead of 0.25. But they've stated in their feasibility study that they will produce copper, their operating cost for production of copper will be about $1,500 a tonne. That compares with about $7,000 a tonne. I'm not saying that our costs will be the same, but we are going to be using the same process, so it is something that we could compare with them in due course when we do our feasibility work. That deposit is quite a bit larger than this one, but this one with 120,000 tonnes of copper in it at this sort of grade is a beauty. We're very happy with it.
No, I'm sure it's good to have an example to use in your scenario. You mentioned money earlier. Cash-wise, how is the company looking?
Rob, I can't remember when we were this well off with cash at the moment. I guess there's more cash coming in than we're able to spend right now, and that's a good place to be. We've gone through a period where we were on the bones of our backside and had very little available cash. Late last year, when we did a placement and replacing in October and put the issue of urgent cash capital raises at big discounts to bed, we've managed to improve our share price, and people are exercising warrants all the time. And I think now we've had over £1.5 million worth of warrants exercised in the last, 3 months, and more, and there's more coming in. So we know that we are fully funded to do what we need to do with our projects for the rest of this year. There are very active programs for Molly Hill to complete the feasibility and hopefully get that ready for finance in the next few months. There's some metallurgical test work and some scoping work to be done at Pilot Mountain. We are fully funded for those activities, so we think we'll be able to advance all of our projects significantly this year without calling upon our shareholders for funds. And I can't remember the last time I was able to look forward at the start of the year with that sort of confidence. It's a great position to be in.
I can imagine so, and one that I'm sure that the shareholders will quite like. Mick, thanks for taking your time. It sounds like you've got a busy year ahead, but great for you to chat to us, and hope to hear us soon.
Rob, thanks very much for your time. Nice to talk to you.
No problem.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.